Kenya proposes to increase the tax on international digital companies like Amazon, Netflix, Twitter, and PayPal that use the internet to promote and sell products, signaling a hardening of Nairobi's position against the US-backed global minimum rate on multinationals. This will happen through the Finance Bill 2022, according to the Kenya Treasury, which proposes to raise the digital tax service from 1.5% to 3% of the gross value of online transactions in the fiscal year beginning from July. In a rapidly digitalizing global economy, the Kenya Revenue Authority has recognized foreign enterprises that derive income in Kenya through digital marketplaces, selling entirely online or providing venues for such transactions as a key generator of tax receipts. In the Finance Bill 2022, Treasury Cabinet Secretary Ukur Diatani wrote that the third schedule to the Income Tax Act is changed by eliminating the word 1.5% appearing in paragraph 12 of the digital service tax rate and replacing therefore the expression with 3%. Under the present 1.5% tax, the KRA aimed to raise 13.9 billion shillings in 3 years, ending in June 2024, with foreign enterprises in Kenya's digital marketplace expected to contribute 926 billion shillings in gross income. Now, digital service tax receipts are expected to be 3.4 billion shillings this fiscal year, 5.0 billion shillings the following fiscal year, and 5.5 billion shillings in fiscal year 2024. So we'll be discussing Kenya's plan to double tax on big tech companies today. And you're welcome. This is Business Edge. I am Lekan Onabanjo, standing in for Tolu Lokpe Adelero Balogun. And joining me from Nairobi in Kenya is Professor N Iraki, an Associate Professor, University of Nairobi, Faculty of Business and Management Sciences. Thank you so much, Professor, for joining us once again on Business Edge.
Thank you. Good morning.
So looking at the topic for today, I would just want to throw it at you once and for all. Like, why is Kenya increasing the digital service tax at this particular time?
You must remember that government is always looking for some extra revenue, particularly when you have a budget that has a deficit. So one of the fastest growing sectors in Kenya happens to be the digital economy, the ICT sector. And by growing, it means there's a lot of revenue and a lot of profits that the owner of companies are making. So by extension, the government wants to get part of that action by getting some tax revenues from it. Nothing very unusual. In a growth sector, in a profitable sector, the government usually have a habit of trying to get a tax from it. And that's what we are doing in Kenya.
All right. Well, most firms would have to transfer the consumer rate and, of course, the price and everything that has to be paid, most especially the cost now, to the consumers. And at this particular time, it is the Kenyans. Don't you think it will affect the patronage level and the use of the platforms of these foreign tech companies?
That can be debatable because if you look at the use of internet, the use of digital services, it is almost like an addiction. Like there will be smoke, there we take beer. So even if the taxes are doubled from 1.5 to 3%, I don't expect a significant decrease in the use of these services. So I think it's a clever move by the government to raise taxes because they know even if the taxes go up, we are still going to use those services. So I don't think it will affect the sector significantly.
Let's take a look at the homegrown tech companies now, indigenous companies in Kenya. While foreign firms such as Netflix, PayPal, Amazon, and the likes are set to be the targets. Now, do you think this will actually increase the digital tax effect it will have on homegrown tech companies as well?
I think the homegrown companies are going to be affected because, first of all, they are small. I don't know the reasons why they have done very well in that particular space is because the taxes have been low. When a sector has very low taxes, a lot of participants are attracted. And one of the good effects of that attraction is that there's competition. And when there's competition, there's a lot of innovation. And that's what has been happening in Kenya's ICT sector. That's why Kenya is often called the Silicon Savannah. So I think for the small farms, the startups, they might be affected by that tax, but not as significantly as well-established big farms that are foreign owned and are established in the Kenyan market. My biggest fear is that this tax might discourage innovation, which is the heart of this sector.
Well, is there any justification when you talk about doubling taxes for these tech companies as planned by the government? Because some people are wondering, is it something that should be done now? Is it significant? Is it meaningful, so to speak? And will it not lead to disputes between these tech companies and the government and deter would-be investors that would want to invest in the company? You talk about the so-called Silicon Savannah. Don't you think it will have a rippling negative effect on these banks, or on these tech companies and would-be investors coming to Kenya?
Let's start by pointing out that the dispute in taxes between the Kenyan government and and the ICT sector is not unique to Kenya. I've seen that in Europe too. I've seen some European companies saying that Microsoft, Amazon, and others must pay taxes in the jurisdiction where they make money. So morally speaking, it makes sense for big companies that are making money in Kenya to pay taxes. After all, they are making money from Kenyans. So I think that is just justifiable. I think what we should be discussing is whether that tax is going to discourage investment in that sector and chase away a lot of investors. My hunch is no. The tax rate is only 3%. But if you look at the average tax rate in Kenya, it's about 30%. So I think we should not complain very much about such small rate of taxation. It is justifiable. And I think to see those companies make money in Kenya, I think it is good morals for them to pay some tax and contribute to the Kenya's exchequer.
But then let me quickly chip this in. If we are to look at tax rates comparing Africa to other continents, would you say that we are at a minimal level? Would you say it's healthy, so to speak? What's your take?
I think my take is that if you look at other taxes beyond the digital tax, it is quite high. And if you go to every African country, people complain that they are overtaxed. There's VAT, there's income tax, and so on. And I think to some extent that tax discourages a lot of investment because investors come to Africa or go elsewhere to make profit. If the tax rate is so high, it discourages investors and the government gets less revenue. But as far as the digital tax is concerned, to me, it looks very reasonable. Only 1.5% to 3%. That can be handled by any investor.
Has there been any sort of reaction or comments coming from the affected firms? Have they said anything? Are they willing to comply? Or would you say this would affect them and probably push them out of the country?
I think it's too early to make any conclusion of that. Remember that that bill is going to be effective from July this year. We still have about 3-4 months before it is implemented. And I'm sure between now and then, we are going to have a lot of reaction. Currently, as we discussed, I don't have any specific reaction. The only one we can discuss is how these big companies reacted in Europe. It was not very positive. And I expect them to do the same in Kenya because nobody wants to pay taxes. People want to pay minimum tax. And I'm sure there will be some reaction from these companies, the big companies, the small companies, calling either for the repeal of that increase or maybe calling for the whole, that tax rate should be thrown away. So I expect reaction in the next few months, but for now, I don't have any specific reaction.
All right. Before we go, well, the tax has been moved from 1.5% to 3%. Do you think that is that tag? It's okay. Do you think they could have increased it maybe a little bit higher? Because what the government is saying is that they want to generate enough revenue to boost infrastructure and, of course, to improve the economy, so to speak. Do you think they could have increased it much higher if that is actually their aim?
I think that is a very interesting question because if you increase the tax to a very high level, people tend to shift from that industry. They take their money elsewhere. So I think what the government might do is to increase that tax rate incrementally, maybe from 1.5 to 3%, maybe 4%, and see whether it is going to get more revenue or not. And depending on whether the government is going to get more revenue, they can keep on increasing it, keep it where it is, or reduce it. So I think it is an experiment the government is doing to see how much revenue they can get from this sector.
All right, thank you so much, Professor. We will be back with you in a bit. Just stay with us. Well, Professor N Iraki has said that it is experimental, but then Kenya's plan to double the digital service tax to 3% from 1.5% is part of government's move to tap into the growing online economy to increase its domestic revenues and narrow fiscal deficit. The tax is levied on the sale of e-books, movies, music, games, and other digital contents as it applies to foreign companies. Economists are, however, concerned if the projected revenue from the new DST will translate into a much improved economy and infrastructure using past administration's efforts as a yardstick. But they're beginning to find out at the other side of the break, even as we continue to engage with our guests. It's still Business Edge. Do stay with us. We'll be right back. Welcome back to the discussion on Business Edge, and we have been considering Kenya's plan to double tax on big tech companies with Professor N Iraki, an associate professor, University of Nairobi, Faculty of Business and Management Sciences, as our guest. So we go back to the discussion, Professor. Comparing previous tax revenue and expenditure, will the increase in this tax have any positive or negative effect or impact, rather, on Kenya's infrastructure and, of course, its socio-economy as the government has postulated?
I didn't get your question very clearly, please.
Okay, we are comparing past administration's efforts in terms of bringing about good investments, of course, development of the economy, social infrastructural development, and of course, socio-economical development and all that. But then we're asking if this new move by the government will have any form of negative or positive impact rather, on these factors.
If you look at the current government, in the last 5 years, it has put a lot of emphasis on improving the social infrastructure, health, food security, manufacturing, and it has come up with what is called the Big Four. So it is looking for sources of income from the revenue part from tax to improve on these services. So what we are looking for is, if this money is collected from the sector, the so-called ICT sector, we expect it to be put in the part of the economy that has higher returns. So as long as that money is put into sectors that have the highest returns, like health, like education, like agriculture, so that the standard of living of Kenyans go up, I have no problem with it. What we are not sure is whether that is going to be done when we compare with what has happened in the past. Because people have been complaining about tax leakages, people have been complaining about some tax that is lost through corruption and so on. We're hoping this one will put in the right use.
Now, in your own assessment, how would you describe how accountable the Kenyan government has been so far? Not looking at only this present administration, looking at past administrations, how transparent would you say the past administrations and the current administration has been so far? Because there's a difference between having to collect revenue based on tax and being able to expend those resources, those financial resources, into the right sectors and right aspects that these funds need to be channeled. How would you describe, how do you think that Kenyans can trust the government to judiciously spend this money in the right areas?
In fact, that has been the biggest debate in this country for the last almost 60 years since we got independence. Because the government collects tax revenues every year, and it sometimes has a deficit where it borrows money. And what the citizens and the voters have been asking is this money put to the right use? So the government has tried to justify by showing some of the projects they have come up with, like SGR, like the roads, like more schools, more hospitals, and so on. But I think relatively in the last 6 years or so, the government has not done enough to show exactly what it does with the tax revenues. I believe that the government should have done better, particularly making sure that none of the tax revenues is lost through corruption, which has made a lot of people very annoyed. In fact, most Kenyans are willing to pay taxes as long as they can see where that tax is going.
All right, now stakeholders in other Kenyan industries, such as the food and beverage sectors, have actually decried what they called arbitrary change in tax codes. Now, are there general concerns over taxation of companies in Nigeria? Would you say these companies are actually worried when you talk about tax codes, ever-changing tax codes, if I could put it that way, in Kenya?
That has been a very big debate because most people complain that the tax code in Kenya is very complicated. And it's not unique to Kenya. I hear Americans, I hear Britons, I hear other Europeans saying that the tax code is very complicated. And one of the ways to make sure that we increase the tax revenues is to make the tax code less complicated. Let's make it very easy to pay taxes. Let's make it very easy, for example, to decide what should be taxed and what should not be taxed. So I think, in my opinion, the tax code should be simplified. It should be made easier so that anybody, even a person on the streets, can read it, understand it, and can pay taxes as expected without undue complication that makes a lot of people run away from the government taxation.
All right, thank you so much, Professor. Well, looking at what is happening in Kenya now, it seems as though this plan will move ahead and has come to stay. So judging by this, would you say that the business environment in Kenya is conducive as compared to other African countries? How do you think it will affect the ease of doing business in Kenya moving forward?
Let's be sincere that tax is not the only factor that dissuades people from investing in a country. I think it's one of the many factors. You have to look at the regulations. You have to look at the infrastructure. You have to look at the labor quality. You have to look at the level of trade. You have to look at the security. So tax rate is just one of the many factors that we must consider. And I think the government of Kenya has come to the realization that not only must you improve the tax, the way we are taxed, but you also must improve all the other factors: infrastructure, relationship with the neighbors, relationship with international partners, and even simple things like security and the level of education of all these businesses. So for you to make a country conducive to investment, you have to improve all those factors, not just look at taxation only.
Let's quickly do another bit of comparison. Now, Kenya, alongside Nigeria, Pakistan, Sri Lanka, withheld the vote on U.S.-fronted global minimum corporate tax at the rate of 15%, according to reports that is under the Paris-based Organization for Economic Cooperation and Development. So we would like to know, why did they actually decline to vote on the global tax rates?
I personally was very surprised that the four countries did not vote for it. But if you look at the way minimum tax rate is structured, it is supposed to stop companies or countries from competing and attracting investors, the race to the bottom. So I think what the four countries realize is that if they sign that, they're going to lose out of freedom when it comes to taxing these multinationals that come to invest in their country. So I think it was a good bet, but let's have our freedom in the way we tax companies. We can increase, we can decrease the way we want. So I think lack of that freedom is what made the four countries not sign into that minimum tax regime.
Finally, Professor, there's going to be a change in the name of the handler. That is that the Kenyan Revenue Authority has announced plans to change the name to Kenyan Revenue Service. Now, does this imply that the scope of its work would increase? And what do you think the KRS would do differently from the KRA?
There is a precedent because recently Kenya Police Force became Kenya Police Service. And people are still, the jury is still out on whether the service provision has changed. I think whether you are called Ikemefuna or whether you are called Okonkwo, it does not make a difference. What matters is the service that you deliver. So I don't think we should put too much emphasis on the change of name from Kenya Revenue Authority to Kenya Revenue Service. What we want is service irrespective of the name. That's all that we want.
All right, at this point, we'd like to say thank you so much, Professor N Iraki, for joining us on the show. You've actually dealt with the discourse very, very intellectually. Thank you so much.
Thank you very much, and happy Easter.
Happy Easter to you too. Thank you so much. Well, the forecast for digital service tax collections comprises 3.4 billion shillings this fiscal year, ending in June, 5.0 billion shillings next financial year, and of course 5.5 billion shillings in the one that ends in June 2024. Quite a modest prediction, you would agree with me. But then the handler's name, as we said earlier, will also change from Kenyan Revenue Authority to Kenyan Revenue Service. Well, the agenda has been set already. Let's see where the road will lead for Kenyans, the country's business environment, and the overall development critically yearned for. by the government and, of course, the citizens. Let's quickly go on this break, and when we return, we'll be bringing you NC42 Watch. Do stay with us. Thank you so much for joining us on NC42 Watch. Let's get right into it. The Nairobi Securities Exchange recorded an 18.2% increase in weekly turnover to 1.3 billion Kenyan shillings as the 4-day week came to an end. This is compared to a weekly turnover of 1.1 billion Kenyan shillings on 42 million shares removed and moved at the close of trading on Friday last week. Moving on now, in its bid to continue championing Africa's growth, the Nigerian Exchange Limited announced the launch of West Africa's first exchange-traded derivatives market with equity index futures contracts. According to NGX, the new development is consistent with the exchange's commitment to develop the Nigerian capital market by providing a market that thrives on innovation and responds to the needs of stakeholders in accessing and using capital. In other climes, sub-Saharan Africa's economic growth is expected to decline to 3.6% in 2022. That's this year, down from the 4% growth registered in 2021 as the region continues to battle the effects of the COVID-19 pandemic, rising inflation, supply chain disruptions, and climate change shocks. And this is according to the World Bank in its latest Africa Pulse biannual report. And finally, billionaire entrepreneur, that is Elon Musk, has channeled attention to Twitter Incorporated with a $43 billion cash takeover offer, with the Tesla CEO saying the social media company needs to be taken private to grow and become a platform for free speech. Now, Musk made the bid in a letter to the board of Twitter, the microblogging platform that has become a global means of communication for individuals and world leaders, and it was made public on the regulatory filing on Thursday. His offer price of $54.20 per share represents a 38% premium to Twitter's April 1 close, as the last trading day before his 9.1% stake in the social media platform was made public. And that's all on today's edition of Business Edge. Do not forget that you can download our mobile app on App Store and Play Store. Follow us on our social media platforms at News Central TV. And of course, you can visit our website, www.newscentral.africa, for juicy stories that we have for you there. Until some other time, my name is Lekan Onabanjo. Have a beautiful and resting weekend.